Alright, so we have come to the last question or requirement in tutorial 1 topic 1, which is to construct a notes to the account to show the movement of land, factory building B and the office building for year ended 30th September 2019. Alright, so notes to the account, okay, for PPE is basically notes to PPE, where we are going to show, alright, what are the reasons for the change in the carrying amount at the beginning of the year and at the end of the year. Right, so we are going to show all the movement of asset during the year. Okay, so in this case we are required to prepare for year ended 30th September 2019, meaning that we have to be we have to identify, okay, the accounting period, okay, for year ended 30th September 2019. So it means that, okay, the starting date is on 1st October, right, 2018, okay, until 30th September 2019. All right, so these are the dates. Okay, any transaction that happen, okay, within this date, okay, ought to be considered in our preparation of notes to PPE. All right, so we are required to prepare only for land, okay, factory building B, okay, and the office building. Okay, so we're going to focus on these three assets only. All right, so the first step, okay, the first step, when we are required to prepare notes to PPE, it is good that you prepare the working first, okay, for each of the asset. Okay, because we want to make sure that we did not leave out any transaction, okay, that affecting the asset. All right, okay, so here working. All right, so here are the working for the land. Okay, okay, so we have here working for land, all right, factory building B and office building. Okay, for every working we have to start from the cost, okay, on the purchase date. All right, okay, so coincidentally the land, factory building B and office building were purchased on the same date, which is on 1st October 2009. Okay, and the cost of land is 8 million, factory building B is 18 million, office building is 300,000. All right, and then okay, land is a non-depreciable asset, okay, while factory building B and office building are depreciable asset, meaning that we have to provide for depreciation when we calculate the carrying amount. Meanwhile, for land, okay, the cost will be the carrying amount, okay, for every year, okay, but uh, the cost will change, okay, if there is any revaluation to the land. All right, if there is any revaluation to the land, okay, depending on the fair value of land. All right, so as we discussed previously, okay, there are two revaluation for land, okay, in year 2014 and in year 2019. Okay, there are two revaluation. Okay, okay, so the first revaluation, okay, from the first revaluation we already changed the gross carrying amount of land from 8 million, all right, to its fair value, which is 7.1 million. So we have changed the gross carrying amount. We have changed from cost to revalue amount, which is 7.1 million. All right, okay, meaning that, okay, starting from 30th September 2014 until the next revaluation, the gross carrying amount, okay, or the revalue amount of land is 7.1 million. All right, 7.1 million. Okay, in other words, okay, for opening balance on 1st October 2018, okay, the opening balance of land, okay, for the cost of land is 7.1 million. All right, okay, all right, and then what else happened to the land, okay, in year 2019, okay, for year ended 2019, okay, the one that I highlighted, the reason why I highlighted, I want to make sure that I did not leave out transaction that incurred within the period of 1st October 2018 to 30th September 2019. Okay, for land there is a revaluation and they get revaluation surplus of 1.1 million. So how this will affect in their notes to PPE. All right, okay, what about the factory building? Okay, for the factory building, starting from 1st October 2018 to 30th September 2019, okay, there are a few transactions happen here. The first one is revaluation, okay, on the starting date of the accounting period, and then at the end of the year they provide depreciation based on the new okay, based on the new gross carrying amount, which is 20.5 million. All right. Okay, what about the office building? Okay, what about the office building? All right, so for the office building, what happened is, okay, so for the office building, what happened is, okay, the initial cost is 300,000. All right, okay, at the end of the year 2019, okay, there is a disposal of office building as stated here, okay, as discussed here in additional info number 4. In December 2018, during a meeting conducted by the company's director, they decided to relocate the administration of the company to Machang, Kelantan. Therefore, on 30th September 2019, the company sold the office building at 440,000. Okay, okay, so there is a disposal of the building at the end of the year. All right, so okay, from 1st October 2018 to 30th September 2019, all right, it is 1 year, so we are going to provide for depreciation first, okay, and then we find the carrying amount for 30th September 2019, all right, and then we are going to dispose at this carrying amount. We are going to dispose at this carrying amount. Okay, so the carrying amount at the end of the year is equal to 0. All right, if you had any question, okay, what happened to the disposal value of 440,000? Okay, the disposal value of 440,000 is not that important when we prepare notes to PPE, because in the notes to PPE, okay, there is no place, okay, for us to include, okay, that cash consideration of 440,000. It's going to affect the cash account but not the asset and also accumulated depreciation account. Okay, all right, so the one that will affect the cost and accumulated depreciation account is only related to carrying amount. All right, okay, all right, so now let's prepare notes to PPE for land. Okay, land is a non-depreciable asset. Of course, the accumulated depreciation will be equal to 0. There's nothing here. Okay, but for the cost, okay, for the cost of land or revalue amount of land, okay, so at the beginning of the year, as we discussed before, okay, there is a change to the cost of 8 million to 7.1 million in year 2014. So that will be the new gross carrying amount for the land. All right, okay, but in year 2019, okay, in year ended 2019, there is a surplus on revaluation of 1.1 million. So we're going to add it here. All right, and the balance at the end of the year is 8.2 million. Okay, so 8.2 million minus 0 here, so the carrying amount equal to 8.2 million. So to check whether your work is correct or not, so you go back to the working. Okay, make sure that okay, the carrying amount, okay, at the end of the year is, okay, is equal to or tally to the one that you prepare in notes to PPE. Okay, all right, office building, okay, sorry, factory building B. All right, so the cost, there is no change in the cost at the beginning of year 2018, okay, because we are going to carry this cost 18 million. All right, so no change in cost. All right, because the revaluation only happened, okay, in year 2018, only happened on that day. All right, but when they first open the account, okay, they carry the previous cost, which is 18 million minus the accumulated depreciation 3.24 million. These two will become the opening balance. All right, okay, so 18 million will be an opening balance for cost, all right, of factory building B. Okay, and then the accumulated depreciation 3.24 will become the opening balance for the accumulated depreciation of factory building B. Okay, and then what happened? And then on that day, okay, on that day, 1st October 2018, right, sometime later that day, okay, they record the revaluation of factory building. Okay, so they get a surplus. They make a computation here, so they get a surplus of 5.74. But as we discussed previously, related to the journal entry of factory building B, okay, there are two steps in recording the revaluation of depreciable asset. Number one, we have to eliminate accumulated depreciation against the gross carrying amount of PPE. Okay, number two, then we restate. Okay, we restate the net carrying amount of PPE to its fair value. Okay, so to restate, we needed to record this revaluation surplus. To eliminate, we needed, we are going to eliminate this accumulated depreciation. All right. Okay, so step number one, to eliminate. So eliminate debit accumulated depreciation, meaning we are going to eliminate 3.24. We are going to deduct, okay, from this factory building B account 3.24 million. Debit accumulated depreciation, meaning deduct from accumulated depreciation. Credit factory building B, meaning we are going to eliminate, or we are going to minus from factory building B. For what reason? For the elimination of accumulated depreciation. Okay. Okay. Step number 2, to restate. Okay. So to restate, you debit because increase, because surplus. So we debit. Debit factory building B, meaning you add. So add surplus on revaluation 5.74. And then what else did you credit? Credit ARR. So that will affect ARR account, not in notes to PPE. Alright. Okay. So what happened next? Okay, in office building, we do provide new depreciation, which is 500,000. So at the end of the year, the carrying amount should be equal to 20 million. Okay, so meaning that there is a depreciation charge for the year, debit depreciation, credit accumulated depreciation. So the one that we are preparing now is for accumulated depreciation. So credit accumulated depreciation, meaning you add to accumulated depreciation. So 500,000. Okay, so you add here 500,000. Okay, so 3.24 minus 3.24 plus 500 equal to 500. Whereas for the above, 18 million minus 3.24 plus 5.74 is equal to its fair value, okay, which we already identified before, so equal to 20.5 million. Okay, so what is the carrying amount? 20.5 million minus 0.5 million equal to 20 million. So to check whether you have prepared your notes to PPE correctly or not, okay, then you refer to your working. Is it tally? Yes, 20 million. Here is also 20 million, unless your working is incorrect. Alright, unless your working is incorrect. Okay, what about the office building? Okay, for the office building, okay, the cost is maintained at 300,000. There is no revaluation here. Alright, therefore, when you prepare when you calculate this carrying amount, the cost is 300,000. The accumulated depreciation is 54,000. That would become your opening balance. So opening balance for cost is 300,000. Opening balance for the accumulated depreciation is 54,000. And then during that year, you provide another depreciation 6,000. So you add here. Okay, and then you dispose. All right, on the same date you dispose. Okay. So you dispose at carrying amount. Carrying amount consists of cost and accumulated depreciation. It consists of both cost and accumulated depreciation. Okay. So how do we calculate the carrying amount? How do we get the carrying amount? It consists both cost and accumulated depreciation. How much is the cost? 300,000. So we are going to deduct that 300,000. Okay. What about the accumulated depreciation? 54 plus 6 is 60,000. Alright. Alright. Okay. So we are going to remove both the cost and also the accumulated depreciation. Okay. So this one is 0. This one is 0. And at the end of the year, the carrying amount is 0. So tally with your working. So 0. Alright. So that is how you prepare notes to PPE. That is how you prepare notes to PPE. You can check whether you prepare correctly or not, okay, from the working. So you have to prepare the working first, and then you prepare the notes to PPE. Alright. Okay. So if you have any question, then you may contact me. Alright. Okay. Thank you.